Hey folks, David Frost, mystrategicforecast.com. You're here for another episode of Common Sense Market Analysis. Today is Wednesday, May 20, 2015. Inside the numbers tonight, SPY E-mini. Looks like we're probably going to have lower prices over the next day or so. We're going to talk about that. Crude oil we'll discuss. The gold market, I believe higher prices are coming again. I'm going to discuss that, and I'll show you what I'm looking at. The bond market is on thin ice, and the U.S. dollar is on thinner ice, and we'll talk about those two and what I think is going to take place there. So let's get over to the chart. So here's a daily chart of the SPY, and you can see that we're beginning to look like this was a top that is being put in, right? If you look intraday today, okay, on the 10-minute chart, all right, you can see where this happened after the Fed announcement, which was just the release of their minutes, okay, just after, I think it was 2 o'clock or 2:15 or 2:30, whatever it was, 2 o'clock. And then what happened, we made that high, okay, and we rolled over. All right, so the fact that we rolled over and now we're actually putting in what I would like to consider bearish consolidation down here when we keep moving sideways, as long as we stay below this high here, which is 213.44, there's probably more downside pressure in this market to come. Now, let's flip over a second to the E-mini contract and look what's really going on. Okay, this is what's really going on after the market closed today, and the futures electronic session opened up, and we're down about 5.5, 6 points right now. So you see this brown line here at 21.15. Let's zoom out and let's zoom out to the daily chart, and we'll work our way through. So you can see this high was put in a couple of days ago. Now here is today, and then this is actually tomorrow. So we've started tomorrow's session for the E-mini contract, the futures contract, right? So we had yesterday and today, and now what we're doing is testing the 21.15 that we've had in here for a while. That's always been an important line, right? The next level of support will be 21.05. Okay, so tomorrow I would anticipate hovering at 21.15, maybe testing 21.12, and we could possibly go down to 21.05, whether it's tomorrow or the next day. I'm not sure. It depends on the volume. It depends on what's going on, but they're not that far apart either way. But I think that's going to take place. Now, whether we go lower from there remains to be seen. We're certainly going to, if we come into the 21.05 with the 20-period moving average sloping up and the 21.05 that was an important number to begin with, I would anticipate finding a pretty good level of support there. And if we made any kind of significant lower lows from that point, meaning closed below 21.05 on an hourly basis, then you'd have to look lower. And then I would suggest that the next level I would look at would be 20.92 as a very, very important level, needing to close hourly and especially daily above 21.92 at the next level. So there's your three levels, and then 20.85 is ultra important. Okay, so there's your four levels that you should watch out for in the E-mini contract. You've got 21.15 is where we're beating up against right now. 21.12 is going to come into play. 21.5 is much more important. 20.92 and 20.85. So if you're an intraday player, you're going to see bounces off those levels, and you'll see multi-point bounces off those levels. So on an intraday basis, those are very, very important levels, but keep the hourly closes, and remember, the hourly closes are on the half an hour. Okay, we start at 8:30, so every hour is on the half hour, and the half hour closes, or the hourly closes on the half hour, are the ones we're looking at for 21.15, 21.12, 21.05, 20.92, 20.85. So hopefully that's helpful, and let's go ahead and move over to another market. Let's shimmy over to the gold market. And the gold market also had somewhat of a erratic move around the Fed announcement. Here's your Fed announcement, okay? You went up, you went down, and you finished back in the middle, which is actually, in my mind, a positive, because if we were going to have problems, then we would have continued lower. Now, I drew this 1205.82 level in darker because what I want you to see is what happened earlier today. We tested that level and bounced off of it, pierced through, bounced off of it, and I'm considering that level right now extremely important, which is why I made it a little bit darker. So call it 1206. Hourly and daily closes above 1206 means higher prices. How high? Well, the first level would be to take a run, probably a pierce through this 200 period moving average, maybe make a run at this high here at 1225. I don't think we'll get up to 1225, but I would see 1220 is in the cards. So when could we see 1220? Sometime between now and hopefully this week, but certainly between now and I would say Tuesday. The market's closed Monday. But keep in mind that the gold market trades all day, all night, so that number could certainly be hit in the aftermarket session. And a lot of times what you'll find is these numbers are hit, like for example, the gold market will open up Sunday night and it'll touch our number and then it'll never touch it again for days on end, especially when we open up the next day. In the real market session, if you're trading like GLD, you may not see the number that it touched. So while I'm going over the gold futures market, you have to be careful if you're trading GLD, for example, because some of these numbers get touched overnight, early in the morning, when it's easier to whip the market around because there's certainly less volume. So something to just be aware of if you're trading GLD, and I'm talking about futures, you have to be aware that these numbers can get hit in the early morning, after hour, overnight session. You know, gold trades in Hong Kong, trades in London, so it is trading 24 hours, but once we get to the GLD and the regular market session, we may see different numbers than we saw, 5, 6, 7 hours earlier. Just something to be aware of. Let's go to the crude oil market, and we had a change over today to the July contract, and this is June. And what I'm going to show you in June is the old numbers and lines that we had. But what we have to do is I'm going to go find my July contract on my other screen here. Here it is. I put one line in, and the other one's obvious. We don't even need that line. However, we'll put it in anyway. We got to color up the chart somehow if I can get the line straight. Okay, but basically what we have now is we're probably going to work back down to 56.24, which is this high here in this contract. But what I'd like to do is I'd like to see the next couple of days shake out and let the new contract take hold, because I do have some other things working in some other markets that may prove counter to oil. So what I'm going to do is I'm going to stay away from oil until I get a definitive pattern or a price level reached, like this pivot top here at 56.23. In fact, the exact number, I'm not sure I have that right because I just put this on real quick when we changed over the contract. High is 56.22. All right, it's close enough. So I'll just move it because I'm anal that way. 56.23. Well, now I got to change it again. Oh, sorry, folks. I can't not do this. You don't understand how hard it is for me to look at that knowing it's wrong. It's crazy, but that's just the way it is. Okay, so I'm going to wait for oil to see what happens over the next couple of days. I think we're going to work back down to test 56.24. And if we do, depending on how we got there, that may be a great trade. So it's also the upsloping 50-period moving average. There's going to be great chart level support at that level. So I'm watching it. I'll let you know what I find. But right now we're in no man's land. I'm not taking a trade in no man's land. That's not the way to do it. Okay, bonds. Let's take a look at the TLT. And here we are with really good support at 118.21. We're holding it. We're maybe holding it. Great support at 115.43. We're going to have to see this market show us, right? We haven't seen the bottom put in that we've been looking for. We thought we had it here. We didn't see follow through, came back down to a new low. And now this level is very important. I've calculated this level. It's a very important calculation, but this market is very, very weak. It's on thin ice. I would like to see either a bottom being put in, meaning some kind of a definitive move tomorrow or the next day, or let them just flush it out to 115.43. Let's maybe pierce through it, 115.40, 115 and a quarter. That would be a buy with three hands. Okay, so that's where I stand on the TLT. And if you just want to look at let's just look at the longer term actual price of the bond futures contract. And you see what I'm looking at. It's very, very weak. And if you look here, okay, you still haven't taken out last week's low, which is 150.104. So that's what holds me or keeps me with some hope in this market, that if we can close this week a little bit positive from where we are now, we could possibly consider this the retrace of this bottoming tail. I'm not definitive yet, but that's what I'm looking at. So I just wanted to kind of show you some of the other things that I look at throughout the day. And so some of the things that may not make sense unless I show you the other pieces to the puzzle. Well, now I showed you the other piece to that puzzle. So that's what I'm looking at in the price in the bond market. The dollar, the all-important dollar. Well, here's what we have, okay? We may have found support here, but I'm not sold that this is a low. In fact, these 3 days up and the fact that we did not have a good close today, we finished closer to the low than we did to the high. While we are above the 20-period moving average, we're below the 50. I'm not sold that we've put in a low. So there's a lot of resistance up in this area here. I would think we're going to have lower prices in the dollar coming. That's my take. We'll see what the next day or so brings and see what the price action is. And remember, the price action is nothing other than where the money is flowing. And where the money is flowing is where we're interested. So right now, if I start to see the money flowing out of the dollar, I'm gonna be more confident that my case for lower prices is still here, that we didn't really make a definitive low. Higher prices later this year, yes. Short term, on a daily, weekly basis, I'm not sold that that we saw the low yet. In fact, my low right now is down at this level here, better support, $90, let's call it. So that's where we are. We're just going to wait for the market to tell us what to do, and then we'll just take our cue from there. So that's pretty much everything I have. It still was relatively quiet, but the big news today is the semi-rollover in the stock market, right? The S&P. We bounced off the 2115. What a shocker there. If I wasn't making this video, I probably would have taken that trade. But nevertheless, the market will chop around all night long. We'll probably come down again. Maybe we pierce through it. But the telltale will be had tomorrow's open, and we'll see where this brings us. I think we're going to see lower prices tomorrow. But keep in mind that whatever lower prices we see, whether it turns out to be 2105 or all the way down to 2085, we're going to see higher prices yet again. Okay, this is not the top. This here, okay, let me see if I could use something here. I found this this arrow, so I want to see if it works. This top here, I went the wrong way. Let me get rid of that. Let's try it one more time. Okay, wait, one more time. I know this is a pain in the ass. I found this and I just want to see. This here, where this arrow is, that's not the top. Okay? That's not the top we're talking about. So even if we come down here, that's going to be nothing other than working off some overbought condition, making another bullish consolidation on a daily chart basis. Okay, remember. All right, this is worth the extra minute. Remember, what is this? This is bullish. Okay? This is not bearish yet. I'll tell you when it's bearish. Okay, we're going to come down. We're going to make some lower prices here. But on this chart, it's a blip. It's nothing. Okay? So if you're short the market, from these highs here, or you're looking for lower prices, you can see some lower prices tomorrow. You can see some lower prices on Friday. But, don't look for a catastrophic down leg here in the market. These dips are meant to be bought, all right? Can't say that enough. Can't stress it enough. Okay, I'm David Frost, MyStrategicForecast.com. Thanks for tuning in, folks, for another episode of Common Sense Market Analysis.